All right, so let's get started. If there's any questions or anything, the chat is open and you can request to speak as well. So, good morning. So, yesterday we had FOMC, right? So, at 2, they left the interest rate the same, and then came the Q&A, and overall the reaction was very good. So we've seen a bit of a stress test the day before, kind of false breakout on the Qs. After that, we kind of just chopped around, to be honest, yesterday. There was some weakness after the decision, but the market was bought pretty aggressively by the end of the day. So overall, very good action. Uh, right after the close came big earnings. So Meta is up 11% and Microsoft 9% this morning. So very good earnings reaction. That's always a good sign as well. To see the mega caps, even if they are a bit extended, to react well to the earnings like that. So um, definitely keeping an open mind. That I think that will really be kind of the mantra for me today. um, the market is in one hell of a trend, right? It's been quite a while since we reclaimed the 21 DMA structure. We broke out of that big base into new all-time high, and since then we're really making new highs after new highs, and we don't pull back much. We're not able to pull back even to the 21 DMA. So very strong market. I was hoping for some kind of weakness following FOMC, especially with Brett that was starting to kind of flip down a bit. So let's look at Brett a bit. Um, so we started to kind of curl down uh, 2 days ago, and yesterday on FOMC we closed negative on the day on the McClellan oscillator. So what it means is Brett started to contract underneath the surface, despite what we see in the indices making new highs. So that's always kind of a caution signal for me, not necessarily to go all cash or go short. It just mean that okay, the market is quite extended in time and price, but we're not that extended in price, but more in time. So price is still in that uptrend, still very strong uptrend, but we're starting to see weakness under the hood, and that's what normally just push me on the sidelines to wait and assess where it will go, especially with the first hook down. I usually want to see the next day how we will respond to that breadth hook down. That will tell a lot about the market and where we are in the short-term cycle. So McClellan summation hook down on Nasdaq. We're still above the 10 moving average, and to be honest, we're still in that kind of range and chop area. We're definitely creating that VCP shape on the McClellan. So contraction in breadth. So up cycles within that uptrend are getting smaller and smaller. Same thing with the down cycles, contraction cycles. So uh, what it means is it will probably lean to a bigger move in one of the direction. No idea where it will be, but considering that we are extended in price, either that we start to climax and really go banana and just go higher and higher and be super extended from the 21 DMA. If that's the case, a bit like I shared in last night's market awareness, I want to keep an open mind and just play position by position and test the market and see if it sticks. Then I just de-risk and keep that exposure, um, but not going very aggressive, not ramping back up my exposure like I would do at the end of a correction or at the end of a pullback. That's not the same way of playing this market, this trend, knowing that we are extended. And if we go down, then I have my runners. I'm pretty down to my last runners on everything's. So my goal is really to so let's see. A lab, so super extended from the 21 DMA. My goal is just to leave that runner. Same thing for SMCI. I should have enough cushion into earnings. CRDO just keep going and super extended from the 21 DMA, more than 3 times ATR. PLTR just doing nothing wrong. And to be honest, if we continue to chop into earnings, that will have a good look. AVGO still very extended as well from the 21 DMA, closing in on the 3 times ATR extension. And Rocket Lab, pretty strong action from the 21 DME structure yesterday. Confirmed a daily reversal as well. So yeah, nice setup. And if it does reclaim that reversal pivot, it could be a nice swing. I didn't include that in the focus list, but it would be playable. Usually, I want to see at least 14 days before earning just to have enough time to build cushion. But if your goal is to kind of do a 1 week swing or a couple days, that could be a good setup as well. If the market continue to just grind higher, obviously. Uh, just let's go back to the market real quick. So QQQE maybe approaching another 21 DME structure retest, and we'll have to see if that holds. That's what I'm looking at, to be honest, today. If we open strong and kind of come back into structure, that could also mean that we get short term extended on the downside and oversold, which could spark some type of bounce and some upside move in the market. But overall, like I said, I'm just in observation with that hook down and breadth contracting. Breadth extension we see across the board from very short term to long term. We have that hook down, that lower high structure. So meaning that that trend is getting weaker, and there's weakness under the hood. So again, I don't want to anticipate. I don't want to call the end of that trend, uh, simply implying that uh, either that we find big strength and we climax. But to be honest, what I'm playing and where the hot odds are is this trend is just getting weaker, and we might be due for a bit longer pullback, a bit of a reset that would be only very positive for the market. And that's from those pullback that you really get good momentum and easy money on the other side. So um, if you trim into strength and you're not too aggressive when the market is extended, those opportunity become a real buying opportunity where you can be aggressive and not be feared by that pullback because you have too much exposure, too much risk. I prefer to be lighter into them, uh, and I'm okay to leave some on the table and miss some upside move if it happens. But it will allow me to have good capital to redeploy when the market is finally happening. So let's look at the focus list that I have for today, the names that I think are looking the best. Um, I, I still like Affirm, so we're still building that those higher low structure right into the 21 DMA. We're having that VCP type of action on the right side. So really like that price action. I will look at maybe the 21 DME structure reclaim in that area right here for an entry. But again, nothing aggressive. Maximum 0.25% EC at risk. Like I said, I'm not playing this as if we had a pullback. Um, Airlines are pretty strong. UL, so United Airlines, I think, are is looking the best. We have that daily reversal pivot to play on strength, or look for that 21 DME structure and UTL, so uptrend line retest for an entry on weakness. And finally, Tesla. So Tesla is definitely a lagging name, but at the same time, when it moves, it really moves, and you want to kind of swing it. Earnings are behind. Uh, News. So I really stayed away from that name in that period simply because of the news aspect. And I don't want to get political, but Elon Musk being uh, not working on businesses and working um, with that uh, government program, or whatever the reason, uh, that was creating a lot of news, and that was impacting the stock. So I took my runner down on that big whoosh down. It held since then, but it just went sideways and nowhere, to be honest. But now that news are a bit less, he's back to work. So it might actually be a very good swing because it's really aided. It's showing that big multi-week VCP. So we have contraction in those swing, right? So 25%. Oh, sorry, 25%. Kind of 18% ish, 11%, and in the last 2 days, that's a contraction, so 5%. So you really have your VCP, so kind of breakout and uptrend from here: 25%, 18%, 11%, and 5-6% on the right side. So you have that VCP. It's not breaking down, so uh, we could certainly have kind of flush on earnings right here, but we held a higher low instead. So uh, it certainly adds to the relative strength short term. And yeah, I'm looking at yesterday's high pivot for a reclaim. Not gonna buy this thing on weakness because we're kind of right inside the 21 DME structure, and I want to see the reclaim to confirm the strength. So that's the name that I will look along UL and affirm today. But once again, not aggressive, one name at a time, depending where and how they will set up. Okay, so could you please break down Netflix and how you would approach entering when it means your setup? I understand that it's currently under the 21 DMA, though I would like to hear your way of thinking when you would consider it as a good setup to take. Sure, let's cover Netflix. Okay, so Netflix was a leader, right? When we got out of that correction, it was setting up for a continuation move right into earnings, but there was some kind of negative kicker or expectation breaker. I don't know how you would call that, but we broke that flag to the downside, and it was really setting up for a continuation move. So seeing that kind of breaking down both the 21 DMA structure and that range flag ish means that earnings were a negative reaction. So that being said, and especially just continuing and following through on the downside. So when I see that, automatically I'm telling myself, okay, we're starting to live below the 21 DMA structure. It will need some time. I'm not in a hurry to kind of pick the bottom from here and be early. What I would look for is some kind of sideway consolidation. Right now we're pretty tight. So, but at the same time, you have to consider the relative strength with the market as well. So you have the market just going higher and higher and higher, and Netflix, instead of just retesting the 21 DMA and reclaiming it, it's not showing any RS. It's just going sideways below the structure. So that puts me off right away. I like to trade relative strength. I like to have exposure in the leaders, and right now Netflix is not. So I would wait for Netflix, to be honest. That would not be a focus for me, just because it's lagging the market and it's not showing leadership characteristic anymore. So what I would look, to be honest, if we rally from here, I don't think it's actionable on the first attempt of that retest. I would look for how we react to the retest of the 21 DMA, which is sloping down and declining right now, and see how it builds on the right side after that. Do we reject the 21 DMA structure and make a new low, meaning that we reconfirm the downtrend, or we reject the 21 DMA and we build a higher low instead, meaning that sellers are not strong enough to push that thing down, and buyers are trying to regain control and regain strength over the bears, right? And after that higher low, maybe check for that 21 DMA structure reclaim as a setup. Uh, but just be aware of the market, so market awareness. So if the market just keep going up and going up, and it's extended, and Netflix is setting up a 21 DME structure reclaim while we're extended and breadth is contracting, I wouldn't play that setup just because of that market awareness. Because uh, for me, the market is number one, right? So if the market is about to pull back, even if Netflix setting up, uh, the chances and the odds of working are way less that if we have the market set up on our side as well. Uh, so my indicators on TV. So I will send the link so you can let me share the so that's my template. And if you go into my Git book, so you can find the link in the Discord. You will find a section with all the indicators. So don't go into the traders trading view library, because this is not the latest version of the indicators. Go in the Git book instead, and you'll find the codes that you can go in the Pine editor. You can create a new indicator, and you copy paste that code into it, and you can save as your own indicator. So That way you really have the latest version of the code. All right, so and last thing that I wanted to touch is yeah, credit spreads. So credit spreads and VIX are looking good. So we had that 21 DMA structure, so declining structure retest yesterday. And if it's trading the same as before, it was good buying opportunity. So that's why I say that I want to keep an open mind despite the fact that we're extended. Uh, we're holding structure in the internals as well. And same thing with the VIX, right? So VIX, we had that big spike into the 21 DME structure and that base structure as well, and it was rejected. And we're confirming that rejection this morning. So market is strong. Yes, it extended. It's not overbought anymore. Uh, so the market can definitely go higher and just frustrate everyone that is waiting for a pullback, myself included. But I know the setup that I want to trade. Uh, that's when I do well. So I'm not breaking my rules just to be aggressive in an extended market. But I'm open to test it out and see how this market will evolve, but only with small risk. And the other thing that I wanted to talk about is small cap. So I'm not having clear rules and not following to make trading decision, but I'm still looking at small caps from time to time just to gauge the more speculative and uh, crappy stock action and how they set up. And right now, it's kind of the first time we're still above the 21 DMA structure, right? We're right at the bottom. But what I'm seeing is it's the first time that we kind of break the price structure. So we had that those higher lows, higher lows, higher lows, um, higher lows, all in the 21 DMA structure, right? Higher lows. We kind of sloped down a bit, but still we were making higher lows. And yesterday we had that break of breadth. So McClellan summation broke down and hooked down. Price broke down of the kind of short term uptrend line. So that low structure. And I will look how we respond to that today. So, like I said, that's the first time that we break that low structure, and so far it's not very strong off the bottom of the structure. So do we kind of break down the 21 DME structure today, or we can find some support and we start to chop around a bit like in June? That would be constructive. But seeing that weak action right at the bottom of the 21 DME structure, and after breaking down of that up trend line, and the first time we do it actually is kind of putting me a bit more on the defensive for today, and making me kind of happy of where I'm at with my exposure, because I really want to see the real FOMC reaction, which is usually the day after. Yeah, so very very good question for the Q versus QQQE, right? Um, okay, let's touch on that because that's important. You have to understand, and just to state the question is right now the Qs is positive, but QQQE isn't. Same with SPY and RSP. What this indicates to you? So, okay, really important. Uh, when you look at the Qs and SPY, what you basically have is a weighted average, a weighted index of uh, the S&P 500, so the 500 biggest companies, and the Qs is made of the 100 biggest tech companies, right? So that's what it's made of. But if you take the Qs and the SPY, what you get is a weight towards the biggest mega cap. So it's weighted with the market cap of those companies. So uh, I don't know the exact weight, but you can have for NVIDIA, for example, 8% weight in the Qs. You can have, I don't know, 5% for Netflix and 6% for Microsoft or something like that. And something really small, ANET or something, I don't know if it's in the Qs, but will be like 1% or 0.5% or 0.25% as you get towards the end of the biggest market cap. So what we seen yesterday is Meta and Microsoft earnings, and those are big components of the Qs and the SPY. They are like 15%, if not more, of the Qs. So having that kind of on average 10% move in Meta and Microsoft impacts the Qs and SPY indices, but it doesn't mean that the rest of the components, which are weighted less, have the same action. So it's kind of a distorted price action, and that's exactly why well, QQQE and RSP exist. It's to give an equal weight to all components. So when you look at QQQE, it means that from NVIDIA to the last component on the Qs, it's equal weight. So it's all 1% each because there's 100 components. And it's 0.2% of the S&P 500. So there's 500 components ish. So 0.2% for each component. That's all equal weight. So when you look at the RSP and QQQE, it gives you the real picture of what is happening in the broad S&P 500 and in the broad Nasdaq without being distorted by the mega caps. And that's exactly why we created Traders Lab and those TLMM dashboard is to give the real picture of what's happening under the hood. So you can see the Qs gapping up 1.3% this morning, mainly affected by Microsoft and Meta. But QQQE and TLMM dashboard will tell you the real action of the 100 components. That's what we call breadth because you have the whole picture of the broad market. I hope it answered the question. Great. So maybe a last question. RGT high, the spaghetti. Yeah, it's still looking good. Okay, yeah, I don't have it in my scan just because of the earnings period, so it's a bit too close for me to earnings. But there's still time. If you're looking at at a short term swing, a bit like we discussed for Rocket Lab, I would look at yesterday's high for a daily reversal, so on strength. And if you want to play this a bit of on weakness, so we're opening